So with that, I will hand it over to Ellen White, who is our Manager of Compliance and Strategy.
Thank you, Michelle, and thank you to all of you for joining us this afternoon. As Michelle mentioned, we're working with BDO Canada to develop RPRA's audit procedures for batteries, ITT AV, so that's information technology, telecommunications, and audio-visual equipment, and lighting. And we're also developing these procedures for our hazardous and special products. So we're going to be focused on electronics and lighting today. Yesterday, we held a session for batteries. So if you're interested in what we talked about yesterday, you can refer to the recording and slides on our website. And if you're interested in hazardous and special products, feel free to register and sign up for our session tomorrow. As with our other procedures, we make it clear within the document who the procedure applies to. In this case, this is the audit procedure that producers reporting on their own activities or pros who are reporting activities on a producer's behalf. This is the audit report that they're going to have to submit during the 2024 reporting period. Now, recognizing that we're currently developing those procedures, and so that the timeline between when these procedures are finalized and when 2024 reporting period starts, we recognize that that is a tight timeline, and so we will be communicating any changes to those timelines that need to take place in order for producers and pros to ensure that they can meet these new reporting requirements. So today we're focused on the content of that draft procedure. If you have any concerns about our enforcement once this procedure is finalized, feel free to share those concerns. But we have noted that that tight timeline is does create challenges for businesses, and it's something that we're going to be mindful of as we roll out the final. Peter and BDO are going to go into details about the timeline to develop this draft procedure, but it was a phased approach. In phase 1, before we wrote the draft, we did invite registrants to participate in interviews with BDO, whether it was a group session or a one-on-one session. And we used a lot of the feedback, as you'll see today, in developing this draft procedure. We do recognize that not everyone was able to participate in phase 1. And so that's why the draft we're presenting today is very much a draft. And we really encourage all of you to share your feedback either today during the call using the Q&A chat, or following today's session. You're welcome to submit your comments via email to us, and we'll provide information on how to do that throughout. So with that, I will pass it over to Peter to take us through the rest of the presentation.
Thank you, Ellen. Thank you, everyone, for joining. So my name is Peter Hearn. For those of you that I didn't get a chance to meet in phase 1 of this process, I'm a senior manager within BDO's risk advisory team based in Toronto. And our agenda today is as follows. We're just going to quickly review the timelines of the consultation and what will be the next steps after this point. Take a look at some of the feedback we received during phase 1, which, where possible, we tried to incorporate in the draft procedures we'll be presenting today. A review of the entire draft procedures, or at least sections of it that are most important. And then lastly, just a quick slide on how you'll submit your feedback to RPRA and to ourselves. So the consultation started initially before we had a chance to meet with processors, pros and producers. We did some research. We tried to speak to relevant subject matter experts within the industry. We looked at what other jurisdictions were trying to do for similar types of recycling audits or something similar. We reviewed relevant material that RPRA provided to us. For example, the RER reports that had already been submitted by some processors, we were able to take a look at to get a deeper understanding of the various processes for processing different types of ITT-AV and lighting. Then during the consultation phase, we met one-on-one with producers and pros, as well as having group consultations. Then the next few months was the development of these procedures. So we developed the options that we're going to present on later slides with feedback from RPRA. So there was back and forth to take into account their thoughts and their needs. And now we're into phase 2 of the consultation. So some of you may have had a chance to read the procedures, or at least skim the procedures been posted to RPRA's website, and then we'll be presenting more information today, and looking forward to getting your feedback. After we've done these presentations, we will be finalizing the procedure. We'll be taking into account feedback where we can. We will prepare a consultation report, which kind of summarizes the feedback we received and then our responses to that feedback, whether it was incorporated, why it was incorporated, why it wasn't incorporated. The final procedures will be posted along with that consultation report on RPRA's website in 2024, and then the actual reporting and audit process will begin to take place at a point in 2024. So feedback we received during phase 1. Firstly, it was identified that in many cases, it'll be very difficult for processors and pros to get the cooperation of downstream processors to provide the sufficient and appropriate audit evidence. Some downstream processors wouldn't have the incentive, either due to like the size of the volume of material being sent to them, or they just may not want to participate in such an audit. And then processors didn't want to be penalized for that downstream processor performance if they weren't willing to respond, provide audit evidence. Kind of isn't necessarily the fault of the processor. That's just kind of how the chain of materials work. Obviously, particularly with this material type, there's lots of different sub materials within the ITTAV and lighting category. So we're aware that processors will process those materials in different ways, a variety of different ways. So there's no way a one-size-fits-all procedure would work. We always want to balance the administrative and financial burden with results. We're looking for results for the wider public, the market, and as well as RPRA. And where possible, we were asked to align the RER procedure and this resource recovery performance audit procedure. The RER, which applies to specifically to processors, and then this resource recovery performance audit procedure, which applies to, as Ellen mentioned, pros and also producers who are reporting their own performance. Next slide, please. Okay, so these are the sections of the EEE performance audit procedure that we're going to present. So firstly, it'll be the purpose of the audit procedure, the performance reporting categories, criteria, sorry, which is defined within the regulations, some audit procedure specific definitions, which we include over and above definitions, which were already included in the regulations, as we felt it was necessary to do so. Then we have the 3 suggested or proposed procedures. We have procedures for primary EEE processors. This is a CSA 3000 reasonable assurance engagement. Then a separate 4400 agreed upon procedures engagement for downstream processors. And lastly, another agreed upon procedures engagement for the transfer of recovery credits, which we'll get into more detail on all of those in future slides. And then lastly, the appendices, which form a part of the entire procedural document, which just helps the reader kind of understand certain points. So this is the purpose. This is why this needs to be done. We need to develop these procedures. So the regulation states that every producer shall establish a system and satisfy the management requirement. As part of that, every producer shall cause an audit to be undertaken. So in most cases, producers will work with a pro, and then the responsibility of the audit will fall to the pro, but there are, of course, some producers who choose to report on their own performance without using a pro. So the primary processor audit procedures is a set of guidance for producers and pros to prepare for an audit, and there's also guidance for auditors to conduct an audit. This is because a reasonable assurance engagement, which this would be, allows for any auditor to develop their own procedures. So they may choose to use some or of the procedures that we're presenting today, depending on the specific needs of their client. Then the other two audits, the downstream and the credit transfer procedures, they're also guidance for the producers and the pros, but they're more specific procedures which the auditor would have to undertake to conduct an audit. This is the regulation, the reporting criteria split into two sides. So we have refurbished and reused, and then the process of batteries removed from EEE, and the process of just EEE. Next slide, please. Then we also have the weight of the disposed material, so disposed, incinerated, non-recycled, we might call it. And then lastly, a statement confirming whether the producer satisfied their management requirement. So these are all points that will be included within the audit report, and these are the points, the data points that need to be reported to RPRA. So here are some specific definitions that, as I said, are not included in the regulation currently. So firstly, defining what collected means when EEE has been delivered to a registered EEE hauler, refurbisher, or processor. So it's not the point in time when EEE is collected, a collection point. For example, that could be a bin or some kind of container which is not manned by any individual or company. It is the point in time where a hauler would actually collect it from that point. A downstream processor means any person or company really that receives recoverable resources that were generated from EEE, used and collected in Ontario, of course, from an EEE processor for further processing. All processing activities are considered in scope for this definition until resources can be considered a recovered resource. So if one processor was to take ITTAV product, for example, and process it in some partial way, whereas it is not fully recovered resource, which is defined below, something that can be used to displace virgin material, it is semi-processed. When that material is sent to an additional processor, that would be a downstream processor, and there would be separate audit procedures which would cover the processing for the downstream processor. Next slide, please. Yeah, first question, Michelle.
So the first question we have, again, you can either provide an answer live, or if you'd like to think about it and submit feedback at a later time, that's also welcomed. But the first one is, are there any other definitions that you think need to be included in addition to collected, downstream processor, and recovered resource? So while we wait for potentially some answers to that, we do have two questions. The first one being if we can clarify who is to reference this procedure.
Sure, I can cover that, and it's and apologies if sometimes it's not clear. Sometimes we use pro as a shorthand when what we need to say is it is a producer's obligation, but we do allow producers to have a pro submit this audit on their behalf. It's for both producers who are reporting on their own activities if they're not working with a pro and they're running their own management systems, or if they want to submit an audit directly to us. It's for those producers, as well as pros who are reporting on behalf of their producer clients. So those are the audiences that would be required to submit this audit.
Thanks, Ellen. And then we have a question asking about when we are expecting to have these procedures finalized and published by.
Yeah, so as Peter mentioned, we are aiming for an early 2024 date for when we'll be able to publish. That is dependent, again, on the amount of feedback we receive in these sessions, and then the time it would take to incorporate them and update the drafts as needed, and then going through some internal approvals process before being posted. and I'll just kind of reiterate what I mentioned at the beginning, is we recognize that the reporting deadlines for performance reporting and for submitting an audit report, they may come earlier in the year. And so we're very mindful of that. And we want to make sure that we're giving registrants sufficient time from the date that those final procedures are published to the date when you're expected to have them submitted. We're mindful of that, and we will adjust timelines or reporting processes as needed. But again, we're targeting early 2024 for the final procedures.
Thanks, Ellen. We don't have any other questions right now, so we can move forward, Peter.
Okay, thank you. So this is a summary of the separate proposed reports that we'll be going into further detail within this presentation. So as mentioned before, we will have a primary EEE processor report, and this will be a CSA 3000 reasonable assurance engagement where an auditor provides an opinion. As I said, they may use all or some or none in theory of the procedures that we are proposing, but this is guidance for them as well as the producers and the pros who will have to facilitate this audit being completed. So then separately, we'll have a downstream processor CSA 4400 agreed upon procedures report. This is a specified agreed upon procedures, so the procedures we put here do specifically have to be used by the auditor to complete this audit, but the auditor does not provide an opinion. It also includes a section whereby the performance as reported in the 3000 reasonable assurance report will be combined with the performance of the downstream processors in the 4400 report. And we'll go into more detail the rationale of why we've done this in the next slide and then in some future slides as well. And then lastly, there's another 4400 agreed upon procedures engagement for the recovery credit transfers. Again, being agreed upon procedures, the auditor does not provide an opinion. And these procedures for when a producer or a pro has bought or sold resource recovery performance credits. So they have, a producer has a management requirement, a pro has an aggregate of multiple producers management requirements. And if they manage more material exceeds that requirement, then they may choose to try and sell that performance credit to another pro or producer who has not achieved their management requirement. So we have some procedures here to validate that that sale or purchase of those procedures was a valid transaction. So this is these are the audit conclusions for a reasonable assurance engagement, and the primary producer, the primary processors 3000 report is reasonable assurance engagement. So there's four kind of options for an auditor to provide in their opinion, and they go left to right in terms of kind of like the best outcome. So the outcome everybody wants is an unmodified conclusion. So this is where the auditor would conclude that the subject matter is prepared in all material respects in accordance with the applicable criteria. Some might call this a clean audit opinion. And then as we travel further away from that, there is a scope limitation. So this would be a modified conclusion. This would be where the practitioner, otherwise it's called the auditor, is unable to obtain sufficient and appropriate evidence for a specific area. So something that was not so material or pervasive that the auditor could carve that section out, say why it's excluded, why they weren't able to obtain the evidence they need, but the remainder of the performance that was being reported, they could provide an opinion on. So they may be able to carve out several areas. For example, if one processor wasn't willing to provide information, they could carve that out as saying that was a scope limitation and explain why. Further to the right is a similar situation, but where the limitation of the scope is so material or pervasive that the auditor is not able to obtain sufficient audit evidence to form a conclusion. And then lastly would be an adverse conclusion, and this is the worst case scenario, this would be where the auditor has identified that the subject matter information is materially misstated. So they have actually, rather than lack of evidence, they have obtained evidence which would demonstrate that they do not believe that the performance reporting was materially misstated. Next slide, please. Actually, just quickly to go back to the last slide. So it's these kind of options of opinions which partially drove our decision to separate primary processes and downstream processes in two different reporting types. We'll go into more detail, but the objective was to avoid having more of these modified conclusions on the right-hand side, or particularly even an adverse conclusion, which wouldn't necessarily provide much value to users of the report. Next slide, please. Okay, so this is kind of a high-level summary of the contents of the 3000 reasonable assurance audit procedures for primary processes. So there's specific suggested procedures for refurbishment, reuse, processing, non-recycling, and confirmation of satisfying management requirement. And then there are several appendices which provide additional guidance for the reader, so the producer or the pro or the auditor, to complete certain steps. Again, this is guidance in many cases, and sometimes it's specific information based on the regulation, and that's clearly explained in each of these appendices. So the step-by-step procedures. So in a nutshell, the form that these procedures take, so would be data analytics, sample testing, reviewing of supporting documentation for transfers between the various parties within the chain of a product moving from collection to a recovered resource. A review of processes mass balance, which is a key element of both primary and downstream processing review. And then lastly, a recalculation of the reported numbers for each of the performance metrics laid out in the criteria. So this is an example over a couple of slides of one of these procedures, step by step. So it initially starts with obtaining a listing, confirming whether these are, in this case, ITTVAV or lighting, checking the calculated weight of collector material, the calculated weight of the process material, recalculating those weights to confirm that the listing provided adds up to the correct total amount, and then comparing those listings to the pro's annual report, which is the performance that they would be reporting to RPRA. Next slide, please. And then the following steps would have to be completed for each of the EEE processes that is within the pro or the producer's system. So if a pro works with multiple different processes, they would have to facilitate the auditor to perform these procedures or similar procedures with each of these processes. So it involves selecting a sample of inbound and outbound movements from the processing facility, checking that the calculated weight of the material, both inbound and outbound, is accurate, confirming the validity of the inbound material, confirming the validity of the sale of or transfer of the outbound material, confirming that the sale of that outbound material is to an RPM with recycled product manufacturer or an end market or downstream processor who is going to use that material in the manner that it's intended for. And for each sample, agree the weight of the total outbound material. So it's reviewing supporting documentation to confirm transactions throughout. And then the next section is a way of validating or trying to validate the processor's reported numbers to the pro or the producer. And this would be reviewing the processing facilities mass balance, which we'll go into a lot more detail in further slides. So the auditor would review this, identify and recalculate the percentage of processed material per kilo of inbound material, and confirm that the total weight of the material allocated to the pro equals the total rate of the inbound ATV allocated to the pro multiplied by that process percentage as confirmed by the mass balance recalculation. So this is one of the appendices, the first appendix, and this is validating EEE. So there's 4 specific criteria that EEE must meet, and these are defined by the regulations. So it needs to meet the definition of the regulation. It needs to have been used in Ontario. It needs to have been collected in compliance with the EEE regulation and transported using registered haulers, processors, refurbishers throughout. Next slide, please. And then the 4th criteria is that it's not one of the following products. Another appendix is validating the calculated weight of EEE. So actual weight or weight based on conversion factors can be used. So wherever an actual weight is used, it would need to be supported by a weight scale ticket or some kind of scale ticket as evidence. This should include some kind of unique number which would be able to be tied to that transaction, including time, date, weight, obviously very important. Alternatively, weight conversion factors can be used. So the auditor would want to ensure that the correct conversion factor has been used. So if the product is a laptop, they've used the weight conversion factor for a laptop versus the weight conversion factor for a PDA. And then that the conversion factor calculation is accurate. So if there's one product, it's multiplied by the correct conversion factor, and that calculation is correct. Auditors would be looking at the available material for each transfer between parties. So this documentation could be hard copy or electronic. If the actual weight is used, then it needs to be accompanied by a weight scale ticket. And ideally, supporting documentation is acknowledged by both parties. So when there's a transfer of material, there'll either be a document from one party and the other to kind of to reconcile, to see that that transfer occurred and the weights are accurate on both sides, or both parties have perhaps signed the same document to say, yes, I received the material that this hauler has delivered to my processing facility.
Thanks, Peter. So the next questions we have are, how does your organization record and store transactions and supporting documentation? Do the records and supporting documentation meet these expectations? And would this information be readily available and accessible to your auditors? So while we wait for some answers to those, we do have another question. Someone raised that these procedures will be posted early 2024, but their contracts for 2024 have already been set. Can we provide a comment on this?
Yeah, that's a really valid point, and something that we absolutely will consider. I can't give you a definitive answer on if and for how long we would delay this implementation, but this is definitely certainly contracts between parties. That is a factor that we need to consider when making the best approach that's going to work for everyone. So thank you for this comment.
We have another question that Peter, maybe you can speak to. It's about if a processor has gone out of business and if there is no proof of the processed material, how would this be treated?
So if this was a primary processor, so first off, it would be down to your auditor to make that decision sort of definitively. But it would be very difficult to include that performance within a reasonable insurance engagement if we weren't able to obtain, or if an auditor wasn't able to obtain sufficient evidence that the processing performance did take place.
And I can add on from RPRA's perspective. we would, from an enforcement angle, we would look at this, we would work with you on a case-by-case basis. So we would encourage, you know, producers and pros to have information sharing, making sure that you're getting that information where possible, so that if a processor goes out of business, you're not without data for like the entire performance period. But we would work with you on a case-by-case basis. That, you know, sometimes these businesses go out of business and it's beyond your control. So from an enforcement perspective, we would work with you.
Thank you both. We have another question. It seems very specific, but might be helpful to others watching as well. So, Peter, if a pro uses 3 primary processors as an example, and those 3 processors use 100 downstream processors, is this pro expected to get 3 CSAE reasonable assurance reports, 1 for each primary processor? Or how would that work?
So primary processing, the 3000 agreed upon reasonable assurance, engagement would include all primary processors. So there would be 1 report whether you use 1 processor or 20 primary processors. The downstream processing, in theory, would work the same in that a agreed upon procedures report could be completed for all of the downstream processors. Obviously, 100 is a very high number, but within that report, it would kind of have a section for the procedures that were applied to each of those downstream processors. And it would be, I guess in that case, a very long document. Alternatively, it could be split into multiple reports, but it certainly doesn't have to be. So the 2 reports that would be provided to RPRA would just be 2 reports, regardless of the number of processes and downstream processes within a PROS system.
Thanks, Peter. And then we have a final question, just asking for clarification on earlier what we meant by if weight is available. They're wondering what alternatives are if weight is not available.
Yeah, so this would be the weight conversion factors that I believe were included in the original sort of brief audit procedures published on RPRA's website. So for each, or certainly a long list of different products, EEE products, there is an average weight conversion factor that could be used. For example, and this is off the top of my head, a laptop might be considered to be on average weigh 3 kilos. And therefore, if you collected 100 laptops, rather than weighing them, you could say, well, we'll apply that 3 kilo weight conversion factor, and it would be 300 kilos. So I understand that in many cases, this isn't practical at all, but it is certainly an option if you are a pro or a producer with a specific product that could be sort of weighed in this way. This is an option that can be used.
Thank you. That's all the questions that we have for now.
Okay, and then so another appendix, validating the outbound shipments. Audit will be looking at the available supporting documentation to support each of those transfers. So sales or purchase invoices, bills of ladings, potentially evidence of payment, so a check or screenshots of the bank statements of either the selling or purchasing party. And then validating the actual use of the recovered resources. So that material was sold to an RPM or an end market, doesn't necessarily validate that that material is then going to be used to replace virgin material in a new product, although it would sort of strongly indicate that. So there are steps that an auditor can do to validate that that material is going to be used correctly. So it could include contacting the company, the purchasing company, checking on their website, even visiting the company in a sort of a specific instance.
The next questions are, What processes or controls do processors already have in place to validate RPMs and end markets? And do pros require this type of evidence when they contract with a processor or pay for process material? So again, we'll give you some time to think about these. And we don't have any questions currently, Peter, so we can, if any questions arise, we can ask them again in the next few slides.
Okay, so this brings us on to the mass balance calculation. So I'll go into a bit more detail of what I've already described. You'll see here a very simplified mass balance. And essentially the principle, as probably many of you who operate process facilities will know, is that what goes into a processing facility must come out, taking into account a certain amount of kind of shrinkage or wastage kind of thing. The two should balance. And the mass balance is suggested as a method to validate the weight of recovered resources reported by a processor to a pro. So as an example, if a processor's mass balance demonstrated a recovery rate of 50%, then a processor would report a collected volume of 100,000 kilos. They would also report approximately 50,000 kilos of recovered resources. And that would match with the 50% recovery rate demonstrated by the mass balance. If a processor was going to report higher weights of recovered resources, so let's say they reported 100,000 collected and 70,000 recovered resources, the auditor would probably want to understand how that was possible. So the mass balance would show on average that it's 50% across the period of time. So how is it possible for that specific pro, the processor was able to recover more resources? And this could be a case that the pro organizes delivery of material that is of a higher standard than the average received by that facility. So there certainly is opportunity for a processor to report more than the average, but it's something that an auditor would want to understand the reason behind. For these procedures, the mass balance is different to the RER calculation mass balance that you will have seen presented by Dylan a couple of weeks ago. And the reason being is that this mass balance calculation is just for the performance of the processor, primary processor. It doesn't take into account resources recovered by downstream processors. And here is a snip of the calculation Excel in question. So this portion covers the opening inventory and inbound product portion for a calendar year. So a processor will have to complete an opening inventory count on January 1st, or have completed one recently and then have sufficient records so that they could kind of calculate what the opening inventory would be on January 1st. If there is any aspects of kind of inventory or inbound that you think we're missing here, we are very much open to feedback. Later on, there'll be a chance to give your feedback or questions on this. Next slide, please. So the next slide is on the recovered and non-recovered material. So this would be all the material that would be sent out of a processing facility. So you see at the top, this is the recovered material. So it's either different types of materials that could be recovered from each of the products, also reuse and refurbishment. Then there's also all the material that is considered non-recycled, so landfill, incinerated, used as fuel, stockpiled. Non-programmed material, so material that is received kind of mixed in with program material, and then needs to be disposed of, but should not count for the collection or recovery of as it relates to EEE, and then potentially transfers to other processes, which we know does occasionally happen, either of products they don't want to or don't have capacity to process, or semi-processed material that they're not able to bring to a fully recovered resource. So this is the type of material that we go into a downstream processor. Then we have the closing inventory section. So again, the processor would have to have completed an inventory count either at the end of the calendar year or sort of prior to that, but have the documentation to support the ins and outs that they'll be able to calculate what the inventory was at January 1st. And then we have the same sort of different material categories. And then lastly is the actual calculation. So this calculation is intended to strip out all of the different variables, the ins and outs that are not specifically either recycled or non-recycled. So it just focuses on the recovered resources divided by the collected EEE. The purpose of the rest of the mass balance calculation is to indicate that the numbers provided by the processor can be relied upon. So if the mass balances taken into account a small amount of shrinkage and wastage, that indicates that the information that the processor has provided to be included in the mass balance calculation, it indicates that information is accurate. And if that information is accurate, then the performance rate that this procedure calculates, there's increased reason to rely on that. Any general questions, comments?
We don't have any right now, and I know we're going to stop for questions again soon, so. Oh, sorry, we just had a few come in. So what if the RER calculated by the processor is not consistent with the producer's audit findings?
So I guess there's two things here. So there is of course, there is the RER calculation that processors are required to report on, which Dylan presented previously. That RER calculation is not used within this this audit. Although the mass balance calculation looks similar, there is definitely differences. So this would be a separate mass balance calculation using many of the same inputs. So it would use the same inventory counts, the same listing of materials ins and outs. But one of the important things it doesn't take into account is the downstream processor's performance. So those two matching is not shouldn't be necessarily a consideration for the auditor. But if the calculation using the method of the mass balance that I just presented does not tie to the numbers reported by the processor, so the example of where they reported 100,000 collection and 70,000 performance, but the mass balance indicates that on average there's 100,000 collection, but only 50,000 because they have a 50% performance rate. That would be down to the individual auditors that are hired by the pro to determine what to do in that situation, whether there are circumstances which explain what the difference is, like I mentioned before, depending on maybe the feedstock of that product that's specifically provided by that pro.
Thanks, Peter. Sorry, I'm just trying to read through some questions. So one question is, it's going back to a previous question we were asked about when we gave the example of 100 processors and how it was mentioned that that's not probably not going to be the case, or maybe that's unrealistic, but someone's just raising that ITTAV downstream process is several orders and can be complicated. So is it considered reasonable that a pro would need to apply the procedures to 200 or 300 downstreams? So I hope I'm asking that correctly.
Yeah, so I guess I can try and answer this. So the objective of the type procedures is determine whether or the amount of recovered resources that has been generated from collected EEE within Ontario. Until the material can be considered a recovered resource, it doesn't count towards that performance. So though it certainly would be a lot of work to apply these procedures to a lot of downstream processes, Without doing so, we wouldn't be able to validate that that resource was actually recovered. As we'll go into the downstream process and procedures later on, maybe that will raise more questions, but we're proposing this idea of separating the two procedures into primary and downstream. But I would say that if we didn't separate them and it was one, these procedures would still have to be applied to the downstream processes. It would just be within one audit rather than two separated audits.
Thanks, Peter. And then someone is just adding on to that question and just wanting some clarification if downstream processors need to be registered with RPRA.
Yeah, so I can handle this one. So under the regulation, the definition of processor is someone who processes E. So ITT, AV, or lighting. And so those are the processors that need to register and report their RER directly to us. As Peter's mentioned, when with processing of E, there's several steps between when that initial material E, the ITTAV or lighting is processed, and when it's actually a recovered resource. And so that's why we're having, in the absence of a downstream processor meeting that definition of an ITTAV processor under the regulation, what can we do to verify that the materials that these downstream processors are processing are actually leading to recovered resources? So I don't know, Peter, if there's anything to add there. I believe we're going to go through it in the next section of the presentation.
Yeah, I think the next section will be helpful on the last couple of questions. So this is the rationale of separating the two procedures into a reasonable assurance engagement for primary processors and a agreed upon procedures engagement for downstream processors. So firstly, a reasonable assurance engagement is required by the regulation. So at least a portion of this of the performance is mandated to be covered by a reasonable assurance engagement. But by excluding the downstream processors, we're reducing the likelihood of the qualified and adverse opinions that would be included if we lump them all together. And these are the opinions that I mentioned further up in the presentation. So the hope would be if it's just primary processors who are more willing and able and really have to comply with these regulations, they would be able to provide information that would be enough sufficient appropriate evidence that an auditor would be able to provide a clean opinion on a pro or producer's performance. It's expected that the agreed upon procedures report will be able to provide RPRA with more detailed and consistent insight into downstream processes than if they were included all in one and there were these qualifications or adverse opinions that were mentioned previously. RPRA may choose to investigate processors who report unrealistic resource recovery performance, including downstream processors where possible, or if they do not provide sufficient evidence. Next slide. So these agreed upon procedures are designed to give a specific list of reports and documents they would need to request from downstream processors. So because these are specific procedures which an auditor would have to complete, that list is fixed. So at any point in time, a producer or a pro could take this list to a downstream processor and say, look, this in 6 months, we're going to be asked to get this information. Here is this list. Maybe you can start working on it preemptively. The procedures also leverage the mass balance calculation to calculate the downstream process performance and compare it to reported weights. So as I mentioned before, the mass balance is a way of validating that the reported performance of any processor, including the downstream processor, is realistic. If you'll be able to recreate that mass balance calculation, then that would help an auditor validate that that performance is correct. it's very similar procedures to the CSA 3000 engagement. So at least there is some consistency between the types of information that an auditor would be asking for. If, as expected, the same auditor would perform both engagements for a pro. It combines the performance of the primary and downstream processes. So, for example, just a very simple example, if the primary processes processed 1 million kilos of material for a pro, and the downstream processes processed another 1 million kilos to the point of being a recovered resource, then there's steps in the procedures which would then combine those obviously into 2 million kilos of total performance for that pro. Very importantly, I think the downstream processes performance is incorporated regardless of sufficiency and appropriateness of evidence. So if a downstream processor reports 100,000 kilos and the auditor attempts to perform the procedures, the specified procedures on that downstream processor, and the downstream processor does not provide any information, those 100 kilos would still be combined with the primary processor's performance for that pro. That pro would still be able to report that, but the audit specified procedures audit report would show that the auditor was unable to obtain any information from that specific downstream processor. So this would obviously clearly highlight the non-compliance of that downstream processor. Alternative, or not alternatively, but hopefully in some cases at least, downstream process will provide some, if not all, of the required documentation. But again, the audit report would clearly show what information an auditor was able to obtain, whether they were when they were able to obtain it, and they compared it to supporting documentation. Was that accurate, or did that supporting documentation provide appropriate evidence for the reported numbers? So the results of the specified procedures is much more specific. And this goes back to the more useful information. If perhaps a stumbling block for a downstream processor is that they don't perform any inventory, well, this would clearly be highlighted in this specified procedure results. And potentially a processor or pro or producer could work with that downstream processor to help them either encourage or help them fill some of these gaps in. So here's an example of the procedures for downstream processes, the agreed upon procedures. So you'll see it goes hand in hand with the mass balance that we previously presented. So it'll be obtaining the listings that would support the mass balance. So the open inventory, processed material, semi-processed material, non-processed material, combining those to get an open inventory and inbounds of one side of that mass balance calculation. Next slide, please. So there's several other steps like that. And then we get to 6, which would be comparing the downstream processes recycling rate determined through this mass balance. So once the auditors have obtained all the information they need to calculate that mass balance, and we'll get that mass balance number, let's say 50%, the auditor would then be comparing it to the reports provided by that downstream processor. So again, the example of if we calculate 50% and it looks like the downstream processor has a 70% recycling rate because they reported 100,000 collection and 70,000 performance, this would be reported here. This wouldn't be a case where the auditor has to do anything with this information other than report it. It would just be clear, as you can see from 6E, calculate the difference between the two. So this, in this case, it would be the difference of 20% between 50 and 70. So the reader of the report, RPRA, would be able to see, and potentially when there are significant variances, this may cause RPRA to want to further investigate why the information being reported does not match with kind of supporting documentation of a mass balance calculation. And then the last step in the procedure is the combination of primary and downstream. So as I've mentioned before, regardless of the evidence provided by the downstream processors, their performance would be included in combining the performance from the 3000 report and the results from the 4400 agreed upon procedures report.
So the next few questions are, do you agree or disagree with the approach of separating primary and downstream processor verification? If you do disagree, what do you think would be a more effective approach? And since providing feedback in the initial consultation, so that's phase 1, do you think downstream processors are more or less likely to provide sufficient evidence? So while we wait for more questions, we do have 2. One is following up from a previous question about downstream processors who are not registered with RPRA. Can their mass balance and RER still be included in the PRO's total recovery calculations?
Yes. So we understand, and RPRA understands, that some downstream processors will not choose to register with RPRA. That would not stop them from being included. However, just to add, a primary processor who receives Ontario EEE does have to be registered with the RPRA to comply with the regulation, and therefore they would be included in the primary processors agreed upon procedures report.
Thanks, Peter. And then another question is, how is the conflict of interest, if there is any, for pros who are also registered processors addressed?
I would probably have to hear more about a specific example of that to understand what the conflict might be. Potentially, the opposite would be the case, that a pro who is also a processor would be able to provide very good information because they have kind of everything within their sort of within one company kind of thing. But an audit firm would look at that who are performing the agreed upon the reasonable assurance engagement, and if they were determined there is a conflict of interest, they would investigate that further. But the audit procedures should be able to be applied even in this case. But as I say, I'm happy to hear of a specific example, of perhaps not on this specific webinar, to understand in more detail what you're referring to there.
Thank you. And then our last question, it's more so feedback, but just wondering if we can provide a comment to it. Is that some producers and pros don't have relationships with global downstream processors. So are we able to comment on that?
Yeah, and so we heard this feedback a lot, and so what Peter's presented here is one way of addressing that. Our goal here is to ensure that these resources are recovered. And so we're trying to build this procedure in a way to try to get that information, so that as a producer under this producer responsibility requirement, you do have an obligation to ensure that, you know, the materials that are counting towards your management target are not being land disposed, incinerated, as the list in the reg. So if you have feedback around ways that you can get that information, that's an alternative to what we've presented here. We're definitely open to that feedback. And yeah, that was a concern that we heard a lot in phase 1. And so thank you for raising it here as well.
Thank you. And just on that note, since we talked about how people can submit feedback, please email it to consultations@rpra.ca rather than registry@rpra.ca. Thank you. And that's all we have right now, Peter, so we can move forward.
Okay. This is the right slide. Okay. So this would be the last portion of the procedures, and this is for the recovery credit transfers. Going into the details again, I sort of covered a little bit at the top of, in order to meet a producer's annual resource recovery obligation, producer or a pro on their behalf may buy or sell resource recovery performance credits. So for compliance purposes, the EEE recovery credits transfer procedure outlines how to validate these credits. So an audit will have already been undertaken on the performance for that pro, completed by potentially a different auditor. These procedures are just intended to validate that the transaction took place. One thing to mention is that although resource recovery performance is on a 3-year cycle, a pro who is trying to sell or would like to sell credits may want to complete an audit on an annual basis, as this provides additional comfort to the purchasing pro that the credits they are buying have been audited and verified by an auditor in a reasonable assurance engagement. Next slide, please. So these are the specific steps. An auditor would be obtaining copies of the purchase and sales agreement for these credits, obtaining confirmation from the purchaser or seller that the volumes on these sales purchase agreements are accurate, that the dollar amounts on these agreements align with the invoice, and the actual money that was deposited or withdrawn from a pro's bank account. Agree the total weight to the credit transfer documentation, and then recalculate the resource recovery percentage. So take the pro's own performance before the consideration of any credits bought or sold, add and subtract those credits, and then divide the volume of the processed material by the volume of collected material to determine if the results of the calculation meet or exceed their management requirement.
So I believe this is the last, and Peter, please correct me if I'm wrong, last time we're pausing for questions?
Correct.
Yes, okay, so if we have any questions now, here's your time. And again, we'll review how to submit feedback after today's webinar, but we could just pause here to see if any come through. We got a question that's more so clarification. Is the 4,400 recovery credit transfer in addition to the other processes listed or instead of?
It is in addition, but it only applies to producers or pros who are purchasing or selling credits. So if you are a producer or pro and you meet the management requirement, and you can choose to do nothing else, you do not need to sell any excess credits, and therefore you would not need to undertake this agreed upon procedures. But as you could have probably seen from the slide, just a single slide of procedures, it's a very straightforward aspect of this entire procedural document.
Thank you. And we don't have any questions right now. I'll keep an eye out though to see if we get any before we wrap up, but we can move on to the next slide for now, please. Before we move forward, we'll be launching a quick poll like we do throughout all of our webinars, just to gather your feedback on today's session. And this feedback gives us a good understanding on how helpful today's webinar was. So I'll launch the poll for 1 minute and we appreciate your participation. I'll give it 20 more seconds and then we'll move forward. Okay, thank you for those who participated. Move on to the next slide. And there we go. So as we said throughout this webinar, we really do want to hear your feedback. We have the questions here on this slide that we asked during the webinar, but in addition to these, if you have any other feedback, please email it to consultations@rpra.ca by the end of day of December 14th. Next slide, please. And if you want to review the procedure, you want to review the presentation slides from today or rewatch the webinar recording, they will be available on our website. The procedure is currently on our website. And then those who attended this webinar, along with any additional producers and pros, will be sent the final procedure once it's posted to our website. And on that note, we still don't have any questions, so we'll end the webinar, and we thank everyone for joining and for participating. Thanks.